Hey guys, Matt Kucinich here with Stewart Title, and I just wanted to shoot a quick video for you talking about title insurance and what it is and how it works and what it does for you. Now, I'm assuming that you're going to be buying a home with us, which, if so, congratulations. But if not, you just maybe have previously owned a home, or you just wanted to watch an awesome video about title insurance. Well, thanks for watching, and I'll try and show you what I know. This is again going to be a 10,000 foot overview. If you have more specific questions, please shoot me an email or give me a call. Again, I don't want you to take anything that I say here for any action that you may make as solid advice. This is just basically a general overview. It gets a lot more complicated than this, so this is not anything that you have any sort of basis of legal anything on. So here we are. We're going to start with you as our buyer, right? You're going to be typically purchasing a home from a seller. Awesome, right? You're going to pay them some amount of money for them to then sell you the home or basically grant it to you through a deed. Now, what we do as the title insurance company is not just make sure that this transaction is good, but we also help you get a loan from a lender. Because if you don't have straight cash, which even if you do, this still applies, your lender is interested in making sure this transaction is good. So whether it's just two parties or there's a third party financier, we as a title company make sure that there are no issues. So what do? We start from the date that you're going to own the home, and we look back through the chain of title. Not just through this seller, but any seller that ever owned this property beforehand, and all the conveyances, whether they were in a family or outside the family, to see how this seller truly owned the property for you to then purchase it today. Because we want to make sure that the person who said that they can sell you the home really can sell you the home. Not that that's ever happened before. So essentially what we do is we look for different things that can cloud up the title. Those are lots of different issues that all again attach to the property. There's many different things. The largest things that we see are unreleased deeds of trust, loans that have been paid off or haven't, and mechanics liens. But those are all issues that we go through and we knock out and say, as long as these things get taken care of, we commit to insure this property and this transaction. Some things maybe happen before closing, and even some things happen after closing, which is totally fine. So the question is that, hey, once we have a good transfer, that's it, right? Not so fast. You're not just buying the home to hold forever. You typically are going to be selling that home to a future buyer. So here's the kicker. When you sell this home, and hopefully for a lot more money than what you purchased it for, you are going to convey this property with a deed, typically saying, hey, we promise as grantors, general warranty, that nobody from the beginning of time that you own the property all the way back did anything to impact your purchase, just like your seller is going to do for you, typically. What if there was something that we missed, or the court did to screw up where the deed was recorded, or there was a judgment that wasn't placed correctly, or somebody placed a mechanics lien after the fact? If you don't have title insurance, not only are you going to be on the hook for this, but you probably aren't going to be able to sell the home without clearing these issues first. And they can be from your most recent seller or people way before you own the home. Again, many different things that can impact your purchase. But the two biggest, again, that we see are unreleased deeds of trust, people who got a loan but they didn't pay them off, or it hasn't been recorded properly that they're paid off. A good example is that if you've banked with Wells Fargo, that company is made up of many different banks, one of them being Wachovia. We were a Wachovia client, and now we're Wells Fargo clients. Let's say you got a home equity line of credit from Wachovia. Not that we did this from Wells Fargo, but let's say you called up and said, hey, Wells Fargo, you now own Wachovia. We have a client that got a home equity line of credit from you back in 2000. We just want to make sure it's been paid off before this buyer purchases the property. Can you show us satisfaction of that loan being paid or that equity line of credit being closed out? Sometimes they'll say, yep, absolutely. Any bank, not just Wells Fargo, any bank, that yes, that loan's been paid off. Or we get the unreleased deed of trust saying, no, we have no idea whether that's been paid off. So what do? We go through, we curate lots of different things, but we don't want anything to get missed, because not only are we making sure that your purchase was good, we ensure the lender saying, hey, there's nothing getting in between you and your money that you're giving to our buyer, but also, hey, you as a buyer, you want to make sure that your money's protected. So here's where kind of the difference between the policies come in. Yes, if you're getting a loan, there will be a lender's policy. If you're not getting a loan, there will be no lender's policy because there's no third-party interest. However, you as the buyer, there are two different types of title insurance that you can get. You can get a basic policy, which will only insure you for the amount of the property that you purchased from the date of settlement back. Meaning, if you bought a home for $500,000, then your policy is going to be worth $500,000. And if there's different things that cost up to $500,000 of your money that you put into this home, whether it was $100,000 for this deed of trust to get paid off and $400,000 to pay off this relative or this person you encroached on their property or whatever, then once that $500,000 is up, then your policy is done. However, remember, you want to sell this property to somebody later for a lot more money. That's the biggest difference between our basic and enhanced. Is enhanced is going to insure you for up to 150% of the future value of the property. This happens automatically within 5 years. So if I could tell you you're going to buy a $500,000 property and in 5 years you're going to be able to sell that for $750,000, it typically would say, sign me up. So what we expect is that your home is going to appreciate, and that when you promise to this future buyer that there were no title issues, you don't want to be on the hook for only $500,000 of coverage when your home is going to be worth $750,000 or more. So those are basically the main differences between the basic, the enhanced, the loan policy, and just kind of a general overview of what title insurance does. But if you have any questions specifically to your home, shoot me an email, give me a call. I'll be glad to go through any options there, and really be glad to go over you with the title commitment at the table to say, hey, here's what we saw in your property specifically and how we went through, did the forensic research to find out what we needed to do to make sure that your purchase today was perfect. All right. Well, thanks so much, guys, for listening, and talk to you soon.